Welcome to today's market report.
The euro sank on Tuesday to its weakest level against the dollar in almost 20 years, while oil futures tumbled and bond prices rose as investors sought safety after the latest data heightened fears of a global economic slowdown. Recession fears were exacerbated by concerns about an energy crisis and by Tuesday's data, which showed a sharp slowdown in business growth in June, following Monday's news of a seasonally adjusted May trade deficit in Germany versus expectations for a surplus. Oil prices plunged as concerns that a global recession would curtail demand appeared to outweigh supply disruption, fears related to an expected production cut in Norway. US equities pared some losses as the session wore on after falling sharply early in the session following their closure for Monday's holiday. Economists pointed to signs of a looming energy crisis in Europe and mounting economic concerns for the euro's tumble. The threat of a recession in the eurozone is a more clear risk now relative to before. The euro dropped by almost 1.8% against the dollar to 102.36, its weakest since December 2002. It was last down 1.5% against the dollar. The dollar index was up 1.36% after hitting its highest level since December 2002. The dollar is seen as a safe haven in times of acute economic uncertainty. The demand for the safety of dollar-based assets is up as expectations for economic activities are significantly lower. If people are concerned there is going to be a slowdown and put their money in the safest place and cut back on unnecessary spending, it can become a self-fulfilling prophecy. The Japanese yen strengthened 0.01% versus the greenback at 135.69, while sterling was last trading at 119.43, down 1.34%. The Pan-European Stock 600 index lost 2.11%, while Dow Jones, S&P and the Nasdaq all fell by 1%.
This is today's market news. Thanks for listening. We'll see you next time.